for investors, they might not know it, but there's real businesses with real products producing real cash flow being built in crypto today. So as investors, and we're not speculators, we're investors, this is where we focus 100% of our time. And, we talk to funds coming into this space right now, and for the first time ever, they're skipping over Bitcoin and going straight into these, lesser known cryptos with real underlying businesses behind them.
Welcome to Wealthion. I'm Adam Taggart, founder of Wealthion, here to deliver on a promise I made to this viewing audience. In our recent survey, many of you expressed a strong interest in learning more about cryptocurrencies and whether or not they deserve a role in the portfolio of today's prudent investor. And I agreed to investigate for you. As someone who hasn't invested in cryptocurrency to date, I've increasingly felt uncomfortable with my lack of knowledge about the space. Is there real sustainable value being created? Or is it just the latest speculative fervor, a Ponzi scheme doomed to bust? Whatever its future destiny, I've increasingly decided that as an investor, ignorance is not a good strategy. So I've begun to reach out to experts who've been tracking the space very closely, and what I'm learning is fascinating and encouraging. Forget for a moment the claims of serving as a superior currency or store of value. While that may indeed prove out, the true potential for the blockchain appears to be enabling the creation of real and sustainable commercial value over a new platform better suited to many of today's most common transactions. Just like the internet revolution moved a tremendous amount of commerce from the real analog world into the digital world, a similar migration is now underway, this time onto the blockchain. And the value being unlocked is no longer just a promise at this point. Billions of dollars worth of actual transactions are being made by blockchain enterprises now. I'm finding it easier to think of the coming future role of cryptos as less like digital gold and more like digital stocks, where the holder owns a claim on the earnings of these blockchain enterprises. The implications for this promise to be both massive and disruptive, and tremendous gains are already being made by those who are actively buying into these companies of tomorrow. Now, I do want to be careful to underscore, though, that there's still a ton of risk and unknown unknowns in this emergent and largely unregulated space. So a high degree of caution is warranted for those considering putting any capital into play here. But the core idea of a continuation of the analog to internet and now internet to blockchain migration of commerce is compelling. If it indeed happens, those who position themselves in the space early have the chance of buying tomorrow's Google, Apple, or Amazon at 1996 prices. So, in keeping with my promise to better inform us, both you and me, about the crypto space, I'm sharing here the excellent discussion I had at Wealthion's recent conference with Stephen McBride, Chief Analyst at RiskHedge. Stephen, thank you so much for joining us to do this, and thanks for joining us all the way from Ireland.
Yeah, no, look, thank you so much for inviting me to this incredible event that you've put on, Adam.
Well, thanks, Stephen. We're here kind of at the end of the event, so you're really kind of the cleanup hitter here, and I know folks are very interested in understanding the crypto space more. It's really interesting is we get a lot of viewers, a fair amount of them 50 plus and older, who I think they honestly just don't understand cryptos. I mean, I think they're kind of worried a little bit that they don't understand it. They don't know if it's something that's important that they don't understand, or they don't know if it's a Ponzi scheme. Some of them have been afraid of, and so they've just sort of shied away from it. But there's a real yearning out there just to understand the space better. And I've been doing enough digging on my own to realize that I think there's enough there that ignorance is not a good strategy. So I want to use this time here just to kind of raise the overall awareness and understanding amongst our viewers here about what's going on in the space. And then perhaps, Stephen, we can bring you back on the Wealthion channel in the future to dive more deeply into certain areas. But I want to jump off here with a general question, which is, where do you think the best opportunities are for investors? And I want to underscore that word because I'm contrasting it to speculators in cryptos today. Is it buying them as a potentially competing currency, as a store of value, or as something that has commercial application?
Adam, I completely agree with what you said there in the sense that crypto is the most misunderstood asset class in the world today. Most folks, they hear the term cryptocurrency and their mind races towards virtual money and digital coins, right? They think of Bitcoin, and everyone sees this as highly speculative assets with no intrinsic value, right? There's nothing backing it. And just to give you an example, a recent investment report from Vanguard, so it concluded it was a crypto report, and it concluded that since cryptocurrencies are highly speculative in their current state, Vanguard believes their long-term investment case is weak. Our view is that view was true 5 years ago. It was maybe even true 3 years ago, but it is not true today. And look, I want folks listening to really erase this term cryptocurrency from their mind, because it's really a distraction from the game-changing opportunity that's folding in front of us. So, you asked, where should investors focus? Well, for investors, they might not know it, but there's real businesses with real products producing real cash flow being built in crypto today. So as investors, and we're not speculators, we're investors, this is where we focus 100% of our time. And, we talk to funds coming into this space right now, and for the first time ever, they're skipping over Bitcoin and going straight into these, lesser known cryptos with real underlying businesses behind them.
All right. So I want to dig into that. Cryptos with real underlying businesses behind them. I followed a little bit of your work so far, Stephen. I believe you sort of refer to this generation of cryptos as stage 2 cryptos. And I guess first, what do you mean when you say stage 2 crypto? What defines a stage 2 crypto in your mind?
It's kind of a catch-all term for crypto becoming something more than just cryptocurrency, right? It's, we're really witnessing the birth of an entirely new productive cash flow generating asset class. So again, crypto is not just about cryptocurrency. There is, it was kind of, just to go take a step back, all crypto assets are really based on the blockchain. It just so happens cryptocurrency was the first use of this incredible new technology, blockchain, which we believe is the most important invention since the internet. But what you're seeing now, and what we categorize as phase 2 cryptos, is really the productive businesses being built on top of this technology. So, just to give folks some concrete examples. So Uniswap, that's like a stock market for cryptos being built on the blockchain. Now, instead of, stockbrokers or the New York Stock Exchange controlling everything, it runs on the blockchain, and it's run by smart contracts. You can kind of think of smart contracts as money robots. They're clever computer code that can hold, send, or receive money and move assets from one place to another. So again, just underscoring the point of real businesses, $59 billion worth of trades passed through Uniswap over the past month. And I think it's raked in $1.5 billion in revenue over the past year. So that's one example of phase 2 cryptos that we talk about. Another one of them is Helium. So, building a wireless network is incredibly capital intensive and expensive. It's, I think, AT&T and Verizon, they spent around $20 billion building joint cell towers and getting permits for small cells and all these things. So Helium, it invented a whole new way to launch a wireless network. So instead of building it out itself, Helium, we can get into the details later, but it essentially used blockchain technology to incentivize users to build a network for it. And, today has 450 hotspots in over 160 countries, the fastest growing wireless network in history. So you can kind of see how Uniswap and Helium, they aren't cryptocurrency, right? They're real businesses making real money. So that's really what we think of as phase 2 cryptos.
Okay, great. Wow, there's so much I want to dig into there. And I want to underscore some important elements for folks here. So sadly, I'm old enough to remember the transition, the rise of the internet. So I remember the transition of the economy from the analog economy to the digital economy. And this really sort of sounds very similar to me, where that was a transition where you had a bunch of commerce that was done in the real physical analog world, but could be done much more efficiently digitally. And so the internet came along and all these businesses were built atop that platform that unlocked a lot of value, right? And now we have, those as the companies that are basically driving the economy now, right? We got the Googles, we got the Amazons, et cetera. So the blockchain basically allows companies, just as the internet platform, the digital platform, removed a lot of friction, unlocked a lot of value, let companies do what they were doing just better. The blockchain now is a similar catalyst for certain types of businesses. I see you nodding while I'm saying this. So let me just pause for a second. Is that how you're looking at this as well?
Yeah, I think you really hit the nail on the head when you talk about the shift of commerce from analog to the digital world, and now really from the internet, what you can broadly define as Web 2 to Web 3 or crypto. So, crypto networks really represent a whole new way to do business. And I mean, you're seeing incredible amounts of economic activity happen on top of them. So, take Ethereum, for example. So that's the second largest crypto asset and the largest smart contract platform. You can kind of think of it as a blockchain app store, right? It's the app store, and then apps are built on top of Ethereum. So every single day, $34 billion worth of value, that's trades, that's, non-fungible tokens, all these type of things, $34 billion worth of value. It settles on Ethereum's blockchain every single day. And just to put that into perspective, it's more than the payment volume for Visa or MasterCard or PayPal. I think, just to go back to Helium for a second, is another great example of commerce or business shifting from the old world to the new crypto world. So already the fastest growing wireless network in history. It counts Nestle, Lime Scooters, Volvo, car maker Volvo, among its customers. And research from, I think it was from Morgan Stanley, said Helium will have more 5G small cells than Verizon by the end of 2022. So yeah, and they just partnered with Dish, which I think is the fourth largest wireless network in America, to help build out their 5G network. So our research shows that by 2030, Helium can compete with AT&T and Verizon and be one of the largest wireless networks. So even non-fungible token marketplace OpenSea, it's basically think of it like the eBay for digital art and other non-fungible tokens. So in the past 90 days, $7 billion worth of NFTs was sold on its platform. I mean, that's just to, again, put the volume and the size of this into perspective. It's more than eBay or Etsy or even Apple's e-commerce business did. So, you're seeing dozens of crypto businesses producing billions of dollars in value and revenue. And really, we think the rise of these crypto networks are inevitable, given that, it's kind of it turns adversarial relationships into a win for all parties. It just, we view it as inevitable.
All right, great. So what I really want to underscore for folks for what you're saying here is that, these are real companies producing real revenue, real profits at an accelerating rate. And you've already given us some orders of magnitude to say that, hey, not only are they producing revenue, a lot of these are producing a lot of revenue, right? This isn't just a little science experiment somewhere, out there in the digital ecosystem. Like, this is at real scale now, and it's only getting bigger. And so the light bulb I want to try to turn off in folks' heads here, and please correct me if this is the wrong light bulb to turn off, which is, to date, people have, who haven't been involved in the crypto ecosystem, and I count myself among them, thought of it, sort of back to my original point, as a speculator's game. All right, I'm going to buy Bitcoin today and hope that someone else wants to buy it for more tomorrow. And then there's a bunch of hot money coming in that's willing to buy coins like Dogecoin or Shiba Inu, or coins that really don't seem to have any real use. They're almost just kind of like, kitsch collectibles. And I'm just, again, hoping that somebody is going to pay more for this tomorrow. Whether there's a good reason for that or he's just a greater fool, I just want to buy this thing and hopefully flip it. Of course, we see all the headlines about the NFT where people are, buying, I think what most people would say sort of ridiculous items out there. And people think of this as just what happens when you have too much hot money in the system. It just gets spent on, frivolous, useless things. You're saying, just put all that aside for a moment. There are real companies out there creating real value that, big companies, you mentioned, Volvo and Lime Scooter and some other bigger companies than that are already engaging in the magnitude of the revenues that or transactions that they're doing. In some cases are surpassing Visa and MasterCard, like you said. So, the light bulb I'm trying to turn off for folks is these are sort of like, think of stage 2 cryptos as companies. And the crypto itself, and you tell me whether we should call it a crypto or a token, but whatever I buy, it's almost like buying a share of stock in that company where I'm getting a claim on the value that crypto is creating, just the same way as a shareholder in Apple or IBM or Caterpillar or whatever. I'm getting a claim of their profits. Is that all accurate?
Yeah, that's right. In the sense that when you buy a crypto token, you're getting partial ownership of the protocol. You're getting voting rights and the right to collect a dividend if the crypto protocol pays a dividend. I think, and this is a big however, viewers, they have to be aware that not all crypto tokens are created equal, right? So unlike in the stock market, there's no standardization rules for what crypto tokens, what rights crypto tokens have to give token holders. So, many crypto tokens out there, they don't give you any of these rights, and, they're valueless, they're worthless, and they don't have much going for them other than, a nice name and a cool looking logo. So, I just caution people, before you invest in any crypto, you have to understand exactly what you're buying, and most importantly, how it accrues value from the underlying business. Because as I said, these things work very differently. Just to riff, I'm incredibly bullish on crypto tokens, and just to riff on them a little bit, we view them as a whole new way to invest in a business. So as you said, they're like stocks, but really they're like a third way to invest in a business. So we've had equity and debt for the longest time, right? You could buy the equity in a company or you could buy its debt. Now, crypto tokens give us a third way. And the incredible thing about crypto tokens is they are programmable, meaning that they can kind of be programmed to do anything. I think one of the coolest examples of the kind of new frontier crypto tokens open up is something called airdrops. And basically, airdrops is when a crypto business rewards users with tokens. So I mentioned the crypto exchange Uniswap earlier. So when Uniswap launched its Uni token, I think it was September 2022, it basically wired roughly 400 Uni tokens to every user's account, meaning everyone that's made a trade on Uniswap. So that airdrop, it's worth around $7,000 today. A relatable way to think about this is that imagine every time you took a ride in an Uber wired Uber stock into your brokerage account, right? So tokens are a whole new frontier. They open up so much possibilities, but you have to know what you're buying. That's the kind of the counterbalance.
Yeah, I really appreciate that. And that's very important to underscore here that the crypto ecosystem is mostly unregulated at this point in time. So it is sort of the Wild West. And there's great pros and cons to that. What Stephen's saying here is a token can be almost whatever the company wants it to be, right? It can give you a claim of revenue. It can give you voting rights. It can give you other benefits, or it could give you nothing. And the point is Stephen's underscoring here is you really have to do your research as the investor, so that you know what you're buying in this case. And Stephen, I'm just going to flag this because we'll get to it in a bit. This really underscores, in my opinion, Wealthion, we partner with financial advisors to help people navigate the complexity that's out there. And certainly there are industries like we talk a lot about the mining space where there's a lot of chaff amongst the wheat. And so we always recommend you work with somebody who follows the industry closely, who can basically, that's their full-time job, is to tell you, hey, of the thousands of opportunities out here, here are the couple dozen we think are good. I think that's probably even on steroids in the crypto space. I see you nodding here. Okay, good. So let's get to the moment of just sort of some of the benefits that or let me put it this way: some of these strategies that you've come up with for delivering higher than normal returns in this industry, which is kind of known for having crazy returns already. So at RiskHedge, you and your team, I'm going to let you explain it, but you've come up with a way of basically trying to find the good emerging phase 2 companies, letting your followers know about that. But then you have a strategy for getting in these companies, right? There are a couple of things that can happen that can act as catalysts for price discovery in this market. Can you just kind of give a description of your investing approach there?
Yeah, look, just to give folks some context on how you buy crypto assets and where you buy them today. I think most people will be familiar with Coinbase, right? So, Coinbase lists around 115 crypto assets on its platform, most of the major ones like Bitcoin and Ethereum and Solana. But, that might sound like a lot, but there's over 12,000 crypto assets listed on CoinGecko. So if you think about that, you can only buy 1 to 2% of all the crypto assets on these major exchanges. So you're severely limited if if that's your if that's your universe. In addition to that, before Coinbase lists any of these, they often saw 20, 30, 50x, not percent, X. And, there's kind of, if you think about the assets listed on this, it's really the tip of the iceberg. There is so much opportunity underneath to kind of fish for assets not yet listed on these exchanges. So the way we think about it is you really want to buy assets, buy quality phase 2 cryptos before they list on these major exchanges, because the upside potential is just incredible. I mean, why a Coinbase listing or why a listing on a major exchange is such a big deal is the vast majority of people don't go into these smaller exchanges or a decentralized exchange like Uniswap looking for tokens to buy. So when an asset lists on a Coinbase or a Gemini, it's the first time millions of investors are seeing it. And of course, what happens then is they pile in. So, crypto research firm Messari looked at this, and I think it was within the average gain for a crypto asset listed on one of these major exchanges is 91% 5 days after it lists. So by buying those crypto assets before they list, you can just make many, many more times your money. So that's really what we've pinpointed. We try to get people in early before they list on these major exchanges.
All right, great. And so just to super clarify for folks there, there's sort of two things you do. You try to separate the wheat from the chaff, identify these good companies early on so people can buy them on the lesser known exchanges. You said that they tend to have 30 to 50x, or at least, historically have had that kind of return even before getting listed on a big exchange like a Coinbase. But once that token does get listed on a Coinbase, you're saying the average 5-day return is about 91%. So there's sort of two kind of catalyst events there. One is finding it early, hopefully getting some of the appreciation while it's still on the smaller exchanges. And then there's that sort of, really time compressed benefit of when it gets listed on a big exchange, there's hopefully a pop. Did I describe that correctly?
Yeah, no, you're exactly right. I mean, the biggest one really is identifying these quality crypto businesses before anyone really knows about them, right? It's the Coinbase listing process is a bit chaotic. There's no way to know which ones they will list, but we've seen time and time again when something is little known, it just buying when it's early just produces incredible gains. Incredible. It's unlike anything that you will see in the stock market. I mean, these assets routinely go up 20, 30x at least in the past.
Okay, and I presume this is sort of like it's a basket model, right? Where you're doing your best to build a basket of the companies that you and your research team think are the new good ones, and some of them may go nowhere, some of them might implode, but some of them may have some of these gargantuan returns, so that overall the basket does quite well. Is that the right way to think about it?
Yeah, absolutely. I mean, look, with 12,000 listed assets, there's certainly no shortage of assets to pick from. One of the incredibly interesting things is that people might feel like they're a bit late to crypto. I mean, we've been hearing about Bitcoin for a long time, but even if you look at the snapshot of the largest 20 or 30 crypto assets 2 or 3 years ago, a lot of them were the assets that we were talking about earlier, cryptocurrencies. Whereas now, whether you look at the top 20 or you look at, you look on page 100 of CoinGecko, there's just incredible real world businesses being built in this space. And that's really what we try to go after. Those businesses, the helium-like businesses that have the opportunity to, attract not just crypto people in crypto, but non-crypto natives, right? The average everyday American.
All right, so let me speak to that because that is probably a concern that folks watching might have had, which is, hey, you know what? I was just sort of late to the crypto game, right? All the big gains have been had already, and shame on me for not paying attention sooner. But I guess I missed that bus. What would you say to them? And in your answer, if you can just add, I think you understand the analogy, but over here in the US, we've got baseball. The baseball game has 9 innings. Which inning would you say we're sort of in this phase 2 crypto story?
I believe, it's always hard to pick an inning, but it's the first or second inning. And let me tell you why we're so early. I kind of, you can't quantify, it's hard to quantify these things, but today in crypto, we don't even know how to value these crypto assets. So, you go through websites like Token Terminal and you can look at the price to sales ratio or the price to earnings ratio of crypto assets. But I don't believe that's really the right way to value these things. Just like the traditional valuation metrics weren't really, or at least if you followed the price to earnings ratio of internet companies, you just missed out on so much, right? Trying to buy Amazon when it was cheap was a terrible strategy. So today we're so early, we don't even know how to value these crypto assets. And it actually has an interesting analogy to US stock market history. So before Ben Graham and Dodd wrote securities analysis in 1934, people, average investors, did not know how to value stocks. It was just all speculative. Nobody looked at earnings. Nobody was looking at book value, all these things. That's where we are in crypto today. Another way to think about it is that, once upon a time, nobody believed that you could make money on the internet. And it wasn't that long ago, right? It was 30 years ago. People were incredibly skeptical about commerce on the internet. In fact, at one point it was actually illegal to sell stuff on the internet. I think that's where people's mindset is with crypto today. They think it's all still super speculative and, none of these crypto businesses make any real money. So those are two points that point to us being incredibly early. I just go back to if people want to look up the top 20 or 30 assets, even 2 or 3 years ago, it really was all junk cryptocurrencies for the most part. There was Bitcoin and then there was loads of just copycats. It just couldn't be more different today. There's just incredible fast growing businesses with real users and real traction being built in this space.
Great. Well, and that's the main reason why I wanted to bring you into this conference here. So zillion more questions that we're not going to get time to explore in this short conversation here. We only have a couple minutes left. But I hope, suspect I've really triggered the interest in a number of people to learn more. So if real briefly here, you can just give a quick description of the newsletter that your team publishes, because your main job basically is educating investors about the opportunities that you're identifying here.
Yeah, so we're RiskHedge, and our crypto arm is called RiskHedge Venture. So as you mentioned, Adam, it's really our mandate to find little known phase 2 cryptos before they list on these major exchanges. It's not just an investment letter. We really focus on educating folks about crypto. We put as much emphasis on the actual investment as we do on telling folks how to buy it, how to safely store it, hold your hand along the way on the crypto journey, walk it through every step. We do weekly Q&As, and we really take joy on educating people about this wildly misunderstood asset class.
All right, so I'm going to put in a testimonial here. I've been receiving it. I think it's a phenomenal resource for folks that are trying to get up that learning curve. And if they're looking to begin to deploy some capital here, they're doing the homework for you, and you basically can just read what they write, ask questions in that Q&A, and then make your decisions based upon all that intelligence. So anyways, Stephen and his team there have been kind enough to create a special offer for Wealthion viewers. So if you want to learn more about that, just go to wealthion.com/crypto, and all the details will be there. So Stephen, as we wrap up here, for first-time investors, which I think are going to be the majority of folks that are watching here, don't want to put words in your mouth, but my guess is you're not saying, hey, everybody, go whole hog on, these cryptos. There's still a lot of risk involved. But what do you think is sort of a decent starting allocation for somebody? Is this sort of like a 3 to 5% of the portfolio, less, more? What do you think for the first-time person getting involved here?
Yeah, absolutely. I mean, something under 5% is certainly prudent, and also, we really parse out the different type of crypto assets. So something like Ethereum is large. I think if it was a stock, it would be one of the largest 10 stocks in the world. Something like that is still incredibly volatile, but you could have a larger portion of your assets in that. Something smaller like Helium, again, much more risky. But overall, I think people should certainly. The way we think about crypto is your allocation just should not be zero. Okay, you have to have something allocated to this asset class. People are talking about inflation and how to preserve your wealth, but also grow your wealth over time. There has been no better performing asset class in over the past decade than crypto, and we kind of touched on the opportunities, and we believe that many of the best performing businesses, many of the fastest growing businesses will only be investable through crypto markets going forward. So it's an area people have to dive into, have to discover, and we love helping folks along the way.
All right, great. Thanks, Stephen. It's so funny. We only talked about the commercial potential here. We didn't get into the inflation protection elements and all that other stuff, a whole bunch of other reasons why people have bought in to date. But I look forward to getting more deeply into those and the commercial stuff as well in future appearances of you on Wealthion. And folks watching, if you'd like to see indeed Stephen come on sort of a regular basis, maybe once every month or two or so, and continue to educate us on what's happening in the crypto space, please just let us know in the comments section below. Stephen, thanks so much for joining us. This has been phenomenal.
Adam, thank you. Have a great day. And once again, thank you for inviting me.
If you found this interview as interesting as I did, don't forget to head over to wealthion.com/crypto to download Stephen's 40-page report, The Ultimate Guide to Crypto, which he's offering free to Wealthion's viewers. But before you do, to see more new experts on this channel like Stephen in the future, don't forget to support us by first hitting the like button and then clicking on the subscribe button below if you haven't already, as well as that little bell icon right next to it. Okay, now go download Stephen's free report over at wealthion.com/crypto. Thanks for watching.